Good morning, traders. It is 8:01 a.m. on Monday, the 29th of August, 2022. I hope you had a fantastic weekend. Thanks for joining me. This is episode number 2303. I want to just, in case you haven't heard it before, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, sorry about the small delay. It's been a pretty insanely busy weekend and morning here. Lots of new routines and stuff like that, which is throwing me off. Let's jump right into the Convergent Trading pre-market summary sheet. To get more information on what convergent trading is, why I started it, all that good stuff, go to convergenttrading.com. If I am saying stuff that you don't understand, then there's in the red box, the bottom right corner, there's a link there that says go the number 2ct.pro / glossary -terms. Go there and you have a huge table of all the terms and shortenings and acronyms and whatever else you want to see. The current market condition is mild risk off, and just, if you traded Friday and you finish the day feeling like you want to bang your head against the wall because of the sell-off and how orderly that sell-off is, then get in line. It's we sold. Not only did we sell off, especially in the S&P, we sold off and we shifted the point of control to the low end of the range. Just a perfect setup, in my opinion, for a swing short. I don't swing trade, but a swing short for a continuation down into the 4,000. We got to 4,675 in the overnight session. But back to the big picture, mild risk off sentiment. The indices are off anywhere between 75 basis points to 100 basis points. Euro Stoxx 50 and the DAX. Euro Stoxx 50 is the weakest, followed by the NASDAQ off 98 basis points. But what have we done? What happened on Friday? Why did we sell off? A lot of podcasts and discussions over the weekend. But the short answer is, the market's expecting 75 basis points. The market is expecting that Germany's going to come on and say that they don't like where CPI is, the differential between CPI and inflation and the interest rates is not there yet. The market is expecting 3.5 to 3.75 basis points as a terminal rate in this Fed hiking cycle, and that hasn't changed. What has changed, based on what I picked up from the view of the market, is that the Fed's expected to hold those rates for much longer than expected. So the market's been, if you look at the yield curve, the Eurodollar plus the Treasury yield curves, you'll see that the market is really pricing in hiking for the short end of the curve, 2-year, everything from the shortest 1 month to the 2-year, and then they're expecting it to drop beyond there, and it might just hold a little bit longer. So what does that mean for us? It really it doesn't make a difference. I believe that there was very little movement in the treasuries as a result of this. Overall, big picture wise, what has been priced in, it's not that dramatic. We still have a ton of stimulus, 400 billion or plus in stimulus still likely to push into the market in Q3 and Q4. So to me, this looks more like a pull. If I was to, a gun to my head, and I'm not an analyst, I would say that this is more of a pullback. But for me, I've got to look at the facts, and the facts show that we sold off. We had a trend day down on Friday. We shifted the point of control down to the low end of the range. We settled at the low end of the week. The current posture is such that we are likely to continue a little bit lower. But is this a dramatic crash or anything like that? I don't believe so. The items you want to listen for in the news are what the ECB is doing, because it hasn't done very much in terms of hiking. They've got a massive problem with energy, the cost of energy. The ECB is where the hole is at. In addition to that, there's some COVID news out of China. China, of course, would love to have its currency continue to fall against the dollar to the tune of 7 RMB to the dollar or something like that, which makes their product cheaper. It helps the U.S. reduce inflation. It's a win-win, and to move away from this housing crisis. So we're focusing too much on the Fed, basically, is what I've gathered. I'm simply summarizing. These are not my opinions. This is basically a summary of everything I've heard across various networks and gurus and things like that. So that's what we have. It is a Monday. The market is currently balanced across the board. For the calendar, we have U.S. Dallas Fed manufacturing today. There was really nothing released overnight. The big piece today is Fed's Brainerd. More information from the Fed. Today, that's at 2:15 Eastern. Other than that, the S&P itself is completely balanced. Heavy volume, 308,000. That's pretty heavy volume for the S&P. Not outside of one sigma yet, one standard deviation yet. That's at 315,000 or higher. The inventory is 100% short, as we would expect with the type of close that we got. Again, extremely bearish close on Friday. So inventory is 100% short. The range is only 34 points, fairly modest. This is quite common range. The overnight, you could see it down here, that the overnight range, the mode of the overnight range is 35. You've got no sound. How do you have no sound? Can I get a mic check, please? Have I been talking to myself this whole time? Mic check, mic check. Yeah, I'm not sure what's going on there. Everything is telling me that there is sound. So check your side. Maybe refresh YouTube or Twitter Media, Periscope. In any case, this is where we are in the S&P. Let's take a look at the technical side. So that's crude. Here's the crude again. Here's the S&P. So this is what we had on Friday. Look at this baby. Got the point of control right at the low, right against the settlement price. This was very difficult right here. This flashback, the shoot back up following Powell's speech, coming all the way back up and extending the IB from 4202 or something to 4206 before it was settled. And we had a ton of trading right in here in the 67, a ton of trading. I took a long right here, full stop, took a short right here, full stop. Just not a great day for me on Friday. And then from there, you had to be really patient waiting through these consolidations and trading off of zippers. These consolidations did not, you could see here, a pretty nice zipper right there, and it just didn't pull back enough. It pulled back to this low, but I consider these tails. I don't really trade off of them. Down here, we had a good one. This is the only one that I saw that was, so right here is the point where I don't want to trade anymore because the European markets are closed. We're in the lunch hour. We're in the chop. But this is where the best trade for me showed up in the session in the way that I trade to have an opportunity at a push back into the lows. So not definitely didn't feel like the trade was all that great on Friday, given the whiplash. There was a tremendous amount of volume Friday, really good action. But we did 1.8 million contracts, 1.8 million contracts on Friday for RTH only. So we did over 2 million contracts in total. That is very heavy. That is about almost twice as much as the norm. And we trended down and we finished way separated from our day time frame levels, the VWAPs, the mids, and all that. And then we finished very flat with a very, very weak bottom on Friday. So the expectation is as soon as we open, we're likely to gap down. We're likely to gap down or drop immediately, and we did. And now we have what is a balanced profile down here, where the VWAP, the mid, and the overnight point of control are on top of each other. So extreme caution today. Today we're opening in an open auction, most likely an open auction out of range. I'm expecting it to be quite choppy. I'm looking for a gap to settle, responsive buying spree. So I'm looking for it to go back to 40.59 to touch the prior point of control and to settle. So I'm looking for it to respond here and test to see if we want to come back into the prior range and trade in there and check the prior range. If it does hold this area, then we are likely to start working ourselves back to, say the number, come on, before I write it. What are the two numbers that go here? If we get back into the range and we have a bid, what's the price that's likely to be tested above? I'll give you a second because of the delay in the broadcast. The chart time frame here is, this is a PNF chart. It is 1 tick by 20. And the reason I use PNF or Renko charts instead of time-based charts because I don't really care when the bar closes in terms of time. I care where it closes in terms of movement. That's right. 41, 22, 21. Right? So the question is, do we respond today and come back into the range? If we respond today and come back into the range, we have a good chance at basing for the rest of the session and then pushing back up and squeezing shorts, late shorts from Friday, squeezing those back up into 41.21 and 41.40. This is the other area to watch out for, 41.40 up here. So we have a pretty good chance of doing that. If we do that, then we are completely back in balance and nothing has changed. The market is basically saying we are neutral. If we do get a responsive buying spree, we get to the mid-century figure, which is the 40.50 here. Weird way to type 40.50. Get to 40.50 and then just really roll over, especially if we leave a gap, then 4,000 is likely to go. We're likely to break right through 4,000, and then we're likely to move into the 39.89, 39.90 area right down here. We have a single print down here at 90. That's where we're likely to move. That gives us about 60 points of range, which is kind of wide for this volatility currently, but it can be done. So that's what we're looking at in the big picture. So let's look at our TPO chart. What is the TPO chart saying? So unfortunately, I have to zoom way out to bring what? To bring this balance, this key balance. Look at that. Boom. Key balance. There's another box right here. Key balance. And all we did on Friday is we gapped down and then we drove through balance. So we went from balance extreme to balance extreme. We went from 42.06 all the way down to 40.58. So we crossed the entire balance range. We did consolidate during the session. We did consolidate in the point of control area, the MC point of control area, the 41.21 area, 22. We crossed that entire balance. And so my expectation is it is likely to open down here and try to get back into this balance zone. There's some really important fiscal news here that's still in play from the White House, Democrats, whatever, these stimulus measures, and that's likely to cause the market to price that in. But it's likely to improve consumption and all that stuff. There's some disinflationary forces in play here, but those are all macro pieces. I'm looking at the pricing action, and to me, this has simply bearish engulfed the entire balance area, and generally we don't run once that happens. We generally don't continue to run, but if we did, then we are likely looking at the single prints right down here. These are at 90. That becomes the key target down here. So we're still not too far removed from the balance zone, which was 41.75 to 40.75. It's very important today that buyers stage a rally and become responsive and move it back in. Otherwise, the sellers are likely to take us down through the 4,000 millennium figure and then start working through the 3,900 handle. So that's where we are. So this is how things are shaping up. So we are moving. We've moved through this big balance area, and we're starting to work our way through this stuff down here. That's basically what we've got. Okay. What else is there? A quick look at relative delta this morning. The delta really has been pretty sideways through the session. We're seeing an interestingly low number of very large lots. So even though I'm using MBO data, even though we're reconsolidating trades using accurate tick data or MBO data specifically, we're still seeing very little participation, relatively little participation by the 100 lot or higher group within the S&P. We don't expect the very large lots to move a lot in the overnight session, but it's been fairly lazy in the last few sessions. Here's the delta. You could see that the small lots and large lots are on top of each other. The very large lots are higher. The delta is at 0. We're balanced. We're on top of the overnight point of control, mid and VWAP. And this is really a red flag or a caution flag. You know, what is the flag they throw up in those races? It's a yellow flag, I guess. Just a caution flag to say, slow down today, slow down. Let the market decide how it wants to respond to Friday's action and Friday's news, and then decide. And then let's see if the guys step in and become responsive and bring us back into the 41.21 balance, or do we continue to be initiative and push lower? We're already opening below Friday's range on a very impulsive day. I mean, Friday closed below 3 Vol Sigma. That is very rare. It's like, what is the number? It's 99.7 represents 3 sigmas. So half of the remaining would be about a 0.15% historical probability that we would close where we closed, or as strongly as we closed on Friday to the downside. So that means it's a very, very, very unusual day on Friday. So I expect there to be some selling pressure. The sellers are dominant here, but I do not discount, given the overnight session and how it's traded so far and how we've crossed balance, I do not discount the fact that buyers might be able to squeeze sellers out early on. So it all depends. Today, It really all depends on how the players respond as we open. Okay, so what are we looking for in terms of plans for today? Primary scenario, here we are. We're opening imbalance right on top of here. Looking for a quick drop. I'm looking for responsive buyers to step in and say, okay, we've gone far enough. I want to bank some profits, and I'm looking for a gap to settle trade and for it to hold steady in the mid-century figure at 40.50 and go sideways for the rest of the session. I'm expecting this to be a noisy open. The secondary open auction does not have much in it, becomes immediately responsive, takes the settlement price, so we have a gap to settle, but then puts in a higher low here and stays in range. And if that's the case, then we're looking at 40.98 as the topper here, and then that sets up a push for 41.21 on Tuesday potentially. The third scenario, and there is a third scenario because we are out of range on a trend day. The third scenario is immediately responsive, unable to get through, becomes impulsive to the downside, takes out the overnight low, and now we're moving very quickly into the 3,900 handle. So we're looking at 98 or 90 and 80 as key figures below. In either case, it's likely to be a very labored trade. It's likely to be a very fought trade. So try not to get yourself caught up in the action, and try to keep focus on your setups and what the big picture is. It's really important to keep a longer time frame chart in front of you, a TPO chart maybe. Just a longer time frame chart is very important so that you can see where you are versus getting looking at an order flow chart or looking at a very short-term chart like a 3-minute or 5-minute. It's better to look at a 60-minute, 30-minute, 60-minute and see where things are in a big picture so you don't get lost. People get myopic very easily and get lost in the action and wonder why their trades aren't working. But keep a bigger picture, bigger time frame to see where balance is and what the market's doing overall. I want to remind you that on Wednesday, I'm doing this show with Futures Radio Show at 12 Eastern. At 11 Eastern, the giveaway, the new entries for the giveaway stop getting taken. So make sure you register before then to qualify for these 3 pretty expensive drones that are being given away on Wednesday. We'll be talking about trading the S&P discretionary versus automated, man versus machine. So I'll be on on a panel with Scott Andrews and Anthony Crudelli to talk about trading the market as a machine versus trading it as a person. Good luck. I'll catch you there. Be sure to register.